Debt recycling. What is debt recycling? What are the benefits of it? And how can you actually grow wealth by utilizing it for yourself? Debt recycling is simply a fancy word where we turn non-deductible debt, typically this is debt on your personal residence, into tax-deductible debt by recycling it through. Then you use that debt to invest. Perfect example. Let's pretend you have a $500,000 home loan and you might have $100,000 sitting in an offset account, and you want to use that $100,000 to invest, whether that's a down payment for an investment property or to go into the share market. If you use that $100,000 worth of cash, you've then technically bought an asset that has no debt while you have non-deductible debt on your principal place of residence. My suggestion, please make sure you seek independent financial advice, is what you would do is you'd take the $100,000, you'd pay down your principal on your home loan to $400,000, you then access that $100,000 again as a separate loan for investment purposes and buy the asset with that. That debt or the interest on that debt, then because it's used for investment purposes, you can then claim the interest against it and have a tax deduction. So what you've done, you've reduced your mortgage balance from $500 to $400, helps you pay off your principal place of residence much faster. You've still then accessed the $100,000 and used that to buy the asset. So your actual minimum repayments on your initial mortgage, so $500 down to $400,000, that minimum payment decreases, which then as you accumulate assets, if those assets have debt, it makes it much easier and sustainable to continue to grow a portfolio. Of course, ideally you want to keep with the extra repayments. That then allows you to do more debt recycling into the future, and you can continue just to repeat that process. So where this can become really, really powerful is where, if you've watched our previous video on the fast track strategy, is where you build out an investment portfolio mixed in with the fast track strategy showing you how to pay your house off quickly. Every 2 to 3 years, you then pull that money out, so recycle the debt through from non-deductible debt to investment debt and buy another asset. That done over a 10 to 12 year period sets you up for financial freedom in your retirement by having no home loan, converting all of your debt to tax-deductible debt to scale out an investment portfolio. So when we do this for a client, what we like to do is map out from day one where they're currently at, how much owner-occupied debt they have, where they'd like to get to with their investment portfolio, whether that's real estate or stocks. Ideally work with their accountant if they have one, and then build out a formula that helps them and shows them how quickly they can eliminate their mortgage, recycle that money out. By doing that, what's their tax savings every month, incorporating that back into the home loan itself to reduce the debt there and build out that investment portfolio. So it's really important to actually don't do this one piece at a time, to map out the whole puzzle before you actually embark on this journey, so you know this is the exact strategy I'm trying to achieve. What do I need to do every month, every year to actually achieve it, and where the true benefits lie?